everybody. So let's take a look at this recent trade that I took on USD JPY. Now this was a short trade and it was taken for 2.45R in total profit. The stop loss was worth 47.4 pips and the take profit was 116 pips on the dot. So at first glance, you might be looking at this and saying to yourself, why would you take a short trade in the middle of nowhere, right? Price has been very bullish up until this point. What would signal you to take a short trade here? Well, there's a few reasons, right? Let's start by taking a look at the daily time frame actually. Now, I know that the daily time frame is not a part of the 4-hour strategy that I shared in my previous videos. However, it can still be used as a confluence to gauge an overall bias, especially if price is just kind of in the middle of nowhere, right? Like it's surrounded by a white background here. There's no price action to look at on the 4-hour time frame. So that's when it's very suitable to go to a higher time frame like the daily or maybe even the weekly and just see if there's anywhere that could be a potential reaction point for price. And in this case, if we look to the left, we can actually see that we have a very clear order block that occurred right before all of this massive imbalance to the downside, and price is currently reacting within that order block. So with that being said, you can continue to monitor price on the 4-hour time frame in hopes that there's a potential reaction from that daily order block and price may provide an opportunity to go short. So in order to go short, we need to look for that confirmation on our execution time frame, which of course in this case is the 4-hour. So let me use the replay tool for a second. As price is trending bullish to the upside like this, we have to monitor our current structure points. Now, currently I have the Currency Pros SMC indicator applied to my chart. So it shows me the swing highs and the swing lows. And currently we can see that this low would be our recent structure. I mean, technically speaking, we have this as well, but the indicator focuses more on the actual swing structure, right? So as I play price forward, I'm waiting for, okay, we've now topped out here clearly, and we're starting to retrace, but price is still bullish until the structure is violated, right? We need to see structure violated. Either one of these would be suitable, to be quite honest. But the point is, structure needs to be violated to the downside in order to trigger that short opportunity mindset, right? So right there, we can see that structure was violated. Now, it wasn't very clearly broken to the downside. Let me just annotate this for a sec. If you're focusing on the overall swing structure here, I can see how that would look like maybe a liquidity grab instead of a break of structure, because no candle bodies really closed below it. We just basically had them pierce below it and then create this wick, and then price traded higher again. So there's certainly some risk associated with this if that's how you're looking at it. Now, if you were looking at this structure here, that would obviously be a little bit more clear. So it's a little bit subjective here, right? It depends on your outlook of market structure. Both of these are pretty valid points in my opinion. So we don't need to get too minute on the details there. The overall point is that structure was violated to the downside. So as soon as that occurs, that's when I can then draw my Fibonacci tool from the swing high down to the swing low. And I can anticipate that price will test these premium levels up here and then continue this newfound bearish trend to the downside. So that's exactly what happened. As you can see, once I take off the replay tool, it's exactly what happened, right? So let me explain a little further why my entry is right here instead of way up here. And to do that, I'm actually going to show you inside the Discord community, the Currency Pros Discord community, because this trade was actually inspired by our coach, Steven. He provides his analysis to our community alongside myself. And this USD JPY trade wasn't actually even on my radar. This is the beauty of having a community with other skilled traders, right? Our coach Steven posted this trade that he just got in, and he got involved right around here. And I actually caught the retracement back to the 71% after prices had already rejected from those levels. I anticipated it would come back up, which I'll explain in a moment, and then trigger my entry and hopefully go towards the take profit, which it of course did, now that we can see in hindsight. But let me show you inside the Discord community and I'll show you what he posted. So we're here now in Steven's analysis channel in the Currency Pros Discord community. And let's go back to when he actually sent that trade. So where was it? Yeah, So I believe it was right here. That's where he first shared it. So he's not a signal provider. Neither am I, right? We don't need to send trades well before they happen. I do with my personal analysis. I give everybody plenty of time just in case they want to trade along with me. Steven doesn't do that. He shows when he's in the trade already and just explains his thought process behind it. Less added pressure for him that way. So I completely understand. We are not signal providers. I just want to make that clear. So he shared this trade that he was already in, and it was just a beautiful rejection from these levels here. Me and Steven have slightly different levels that we trade from, but it's all based on the same exact confluence. So we have slightly varying styles, but it's overall the same strategy. Price had already rejected his levels. He was deep into profit, at least like 1.5 to 2 hour into profit. And it piqued my curiosity. So I opened it up on my end and I thought to myself, is there any way I can get involved in this? It was, I went not far back enough. It was right around here, guys. So when he sent that trade, it was right around here. And let me hide my position for a second. So I was wondering, is there any way I can get involved in this? Well, the Currency Pros SMC indicator is showing me that there's imbalance here. Now, obviously I could spot that without an indicator, but it's nice and handy to have it there, right? So there's a minor imbalance there. That's one key thing, right? It's not the most important factor, but it's like a clue. So this prompted me to actually investigate a little further on the 15-minute time frame and just see what could potentially happen, right? Is there a possibility that price can come trade higher? Now, I know that in this video, I'm talking about the 15-minute time frame as well as the daily time frame. This is not necessarily part of the strategy, right? These are extra little things that you can do if you have the experience to do so. Like, as you can see from Steven's analysis, he was on the 4-hour time frame the entire time. He didn't go down to the 15-minute or he didn't go up to the daily. He was on the 4-hour time frame and it worked out beautifully for him. He took profit as well, which I can show you down here. He was deep into profit. And he said right here, he closed due to some upcoming news and he's happy with the profit, right? There you can see the actual execution of his trade. So he's happy with it. That's all that matters, right? He closed it a little bit early due to upcoming US dollar news. So he stuck to the 4-hour time frame, which is the strategy, right? Me, because I was late, but I still felt that his trade idea was completely valid. It aligned with my trading plan as well. I wanted to see if there was any way that I could get involved. So at this point, it seemed as though price was too far gone. However, we still had an order block here. So it's the exact same concepts as the 4-hour time frame, just on a smaller scale, like a little more zoomed in, right? So we have a clear unmitigated order block here. Price is leaving behind some imbalance. There's some reason for price to come back up here. It's not likely, but we do have an order block here as well. So it's definitely a possibility, right? So I said to myself, well, there's no guarantee that I'm going to get involved in this trade, but why don't I set my limit order for my initial entry, which was the 71%. And hopefully, if the trade gods are with me today, I will get triggered into this trade. And that's exactly what happened, thankfully. I was fully aware that there was a possibility I would not get involved in this trade at all, but I figured, like, what's the harm in setting a limit order, right? So the price actually did come back and completely fill that order block, like completely mitigated it, and actually pierced right above it. So clearly there was some liquidity resting above there. Price pierced right through it and then started dropping in my favor. And as I play the trade forward, you'll see that there was no further drawdown. There was literally a few pips to drawdown at my initial entry. And then from that point on, price just continued to melt towards my final take profit. So it's actually pretty straightforward, guys. You do not need to go down to a lower time frame such as the 15-minute, and you certainly don't need to go to the daily time frame. But both of those things, if you have the experience to monitor them, can be beneficial, because as you can see, I would have missed this trade if I didn't investigate a little bit further. Now, staying on the 4-hour time frame, I certainly could have just chanced it and just set my limit order here. There was some imbalance here. That was the main clue, right? But me going down to the 15-minute time frame gave me a little more confidence that price would test my entry again. And that's why I was able to get involved. But it is all based on this 4-hour concept, right? And we're trading within this bearish range that occurred on the 4-hour time frame. We're looking for premium prices that are identifiable on the 4-hour time frame. It's all based on the 4-hour time frame, right? And as I showed you, Steven's trade was also only on the 4-hour time frame, he got involved in this region here. So I wanted to zoom in a little bit and actually show you how cool it is when price respects imbalance so accurately. Because that imbalance that I showed you before between these 3 candles, that little gap there, look at how my trade got triggered in. Look at how accurate that is. It's just fascinating to me. I love seeing things like that. So it's pretty cool. This was obviously a very profitable trade. I will put my execution proof up on the screen. Forgive me, I often forget to do that with these videos. It doesn't strike me as a priority, but then I get roasted in the comments for not providing proof. So I will put the proof up on the screen from my MetaTrader 5. I hope you guys enjoyed this video. This is another example of that 4-hour swing trading strategy. And it's hard to even call it swing trading sometimes, guys, because sometimes it can last for, 3 days, 4 days, 5 days, but other times it can actually occur very quickly. So let me briefly show you how fast this actually came to fruition. So from entry to exit, it was, well, TradingView says exactly 1 day. So I'm sure it wasn't exactly 24 hours, but TradingView says 1 day. So it's hard to even consider that swing trading, but it is higher time frame trading. And these trades can eventually, they can turn out to be swing trades, right? But some of them do come to fruition within a few hours to a day. It's very possible. And as you can see, this is a perfect example of just that. So again, I hope you guys enjoyed this video. If you did, please like the video, comment down below if you have something positive to share or have a question that you'd like answered, and be sure to subscribe to my channel for future content.